Hey everyone, this is Randy from the Income Stacker, and today we're going to talk about all those crazy markets we're seeing up and down and all around. It's not really going anywhere, is it? So, what do you do in these crazy times and crazy markets? How do you trade a volatile, crazy market like what we see? Well, my answer is simple. Two-word answer, actually. You don't, right? You don't trade it. Basically, you step away and you start thinking, are there alternatives to just putting all my money into the stocks and bonds? Yes, there are alternatives. Look at this. S&P 500 2018. We started here, 2673. This morning when I woke up, it was 2680. Gotten absolutely nowhere in 10 months. No traction, no upside in 10 months. Now, is that a way to make money? No, absolutely not. Now, should you keep some of your money in the stock market? Sure, but you need to diversify some out. I would say, in terms of percentage, depends on your risk. I have pretty much all of it, except for maybe 10, 20% out of the stock market and in alternative assets. So what should you do when these markets are crazy like this, right? What are some actions you can take? I think the big one is to diversify into alternative asset classes. Now, again, people hear the word diversify. I'm not talking about diversifying into different stocks, right? Somebody will say, oh, I'm diversified. They have some in small caps, some in large caps, some in medium caps or whatever. They have some in bonds. That's not diversification. When the market comes down, all those come down, right? I mean, the small cap, mid cap, large cap, they all come down together. So that's not what I'm talking about here. I'm talking about alternative asset classes. So let's show you some examples so you can get and wrap your head around them. So here are a few that I like. The ones that are starred are my favorites. Mortgage notes, again, they're secured by real estate. I'm buying the mortgage notes typically at a little bit of a discount just in case the market comes down. Private lending, again, the loan to values you're buying at a discount. Single and multifamily rentals. Passive income is great for times when inflation starts as well. Private equity. What is that exactly? Private equity. Basically, these are funds used to buy private companies. Not public companies, but private companies. And they're usually big companies. Now, a lot of crowdfunding, equity crowdfunding sites are popping up all over the place, so even the small guy can get into this game. Direct investment in startups. There's angel investing groups in your area sometimes, and, there's little startups you can invest that way. You can invest in commodities, right? Old, gold, oil, grains, things like that, right? They're going to be around. They're not going to go to zero. I mean, people are always going to eat their Rice Krispies, right? So bottom line is you can invest in commodities. Hedge funds. What's a hedge fund now? How does that differ? That differs from private equity and venture capital in that it's more liquid, right? Since they invest in public companies and not private companies, typically. Again, this is typically. So they invest in public companies that are traded. They can get in and out faster and things like that. So that's kind of the definition, just a real short and sweet one there. Private placement debt, right? This is debt used to finance private companies while giving the investors, some type of cash flow. So those are just a few ideas. Of course, there's a lot of different asset classes and alternatives, but these are the ones that are of interest. And I guess definitely the top three are the ones that I focus on. So that's some food for thought today. Again, check us out, subscribe to our YouTube channel, and we'll see you on the next video.